What do you think Cathie Wood, a known Tesla bull, has to say about Tesla stock? Most analysts are expecting a sharp incline in Tesla stock price in the stock market at the beginning of 2023. You definitely would not want to miss this. Truth wins out when interest rates come down following inflation, said Cathie Wood. Rising Fed rates are pointed out by many as the reason for falling stock prices in the stock market. As other investors worried the U.S. could face a recession by 2023, ARK Investment Management founder Cathie Wood thinks one already has hit and that it could be over in 2023. While many economists and strategists have been resisting the notion that we are in a recession and anticipate that the U.S. may enter one next year, we actually think we'll be coming out of it in 2023, said Wood. In late June, Cathie Wood warned that the U.S. is already in a recession. ARK Invest CEO Cathie Wood admitted during an interview with CNBC that she had underestimated the severity of inflation and proceeded to claim that the U.S. economy is likely already in a recession. Wood blamed supply chain disruptions and geopolitical factors like the war in Ukraine for exacerbating inflationary pressures beyond what she had anticipated. She also said that a recession driven in part by mismanaged inventories had already begun. In mid-2022, Wood said that the U.S. is already in a pretty significant inventory recession, but that it will not be anything like the systemic recession and financial crisis in 2008 to 2009. She explained that it would be more of a garden variety. I think that what we saw in the aftermath of COVID will be repeated during, but not just for a one-year period for the next 5 to 10 years, said Wood. She then laid out a timeline for innovation, stating that the U.S. is now in a period like no other in history. Wood explained that this is from data put together by ARK Invest's chief futurist Brett Winton after consulting academics and academic research. These were the true disruptive innovations throughout history. Wood pointed out that there's only one other time before today that the U.S. has seen multiple innovation platforms evolve at the same time. According to Cathie Wood, it was during the early 1900s when the telephone, electricity, and the automobile transformed the world. Wood took it a bit further and said that the U.S. is now in a period like it was back then. At the time, there was a pandemic, the Spanish flu, and World War I. Those are arguably similar to what we have experienced in the past year with the global COVID-19 pandemic as well as the Russia-Ukraine war. However, those problems were notably much worse than our problems today. Still, even during those tough times, innovation took off and the U.S. ended up with inflation peaking at 24% in June of 1920 and dropping within 1 year to negative 15% in June of 1921. Having been through a very tough period, we ended up in what was called back then the Roaring Twenties. It was a great time for the stock market, it was a great time for investments of all kinds because inflation and interest rates were coming down, said Wood. Wood then continued to say that today there are 5 innovation platforms evolving at the same time in the U.S. This has never happened in history, and the seeds for all of them were planted during the 20 years that ended in the tech and telecom bubble. The tech and telecom bubble is the first time a lot of investors heard this concept of exponential growth, and they bought into the dream, but the problem was back then, the technologies weren't ready, and if they weren't anywhere near ready, the costs were way too high, shared Wood. Wood further explained that we didn't get the cloud until 2006 with AWS, and that we didn't get the big breakthroughs in artificial intelligence with deep learning until 2012. In terms of DNA sequencing, when the first whole human genome was sequenced, one person's genome back in 2003, it had taken $2.7 billion and 13 years of computing power to sequence that one genome. Even if the cost had collapsed the next year by 75%, it would still have been too expensive. In light of that, we have gone from $2.7 billion for one person's genome back then to $500 today and a few hours of computing power. In fact, 2 companies, Illumina and Ultima, claim that it is quite possible for it to be $100 or $200 by next year. So we believe we are ready for prime time now. The technologies are ready and the costs are low enough. That's critical, says Wood. Now, what are these platforms that Cathie Wood said are evolving at the same time today? First is DNA sequencing, which is now called multi-mix sequencing since it is no longer solely focused on DNA sequencing but now includes RNA, proteins, and methylation. It's very complicated, but it's really exciting. We're going to be curing disease thanks to these breakthroughs, and in fact, we've already had one, a very important breakthrough, just within the last week, said Wood. Another innovation Wood referred to is robotics. According to her, industrial robot costs are dropping precipitously. We have a labor shortage, innovation solves problems. The demand for robots is skyrocketing right now, Wood said. Energy storage is yet another innovation that Cathie Wood pointed to. According to her, consumer preference is shifting to innovation. Wood said that it is not just in response to the Russia-Ukraine war, which caused oil prices to go up, but also because these are now better cars that are more environmentally friendly. Another is artificial intelligence. The breakthroughs in AI today, I have to tell you, are mind-blowing even to us. Now we're trying to look as far into the future as we can, and we are seeing breakthroughs that we expected in 5 or 10 years happening within 6 months and 1 year now, said Wood. The last evolving innovation that Cathie Wood talked about is the ChatGPT, a computer program launched by OpenAI in November 2022 and is built on top of OpenAI's GPT 3.5 family of large language models, and is fine-tuned with both supervised and reinforcement learning techniques. Among the 5 simultaneously evolving innovations today that Cathie Wood talked about, Tesla encompasses 3 of them: robotics, AI, and energy storage. Because of this, many are optimistic about the company's future. Tesla is expected to announce record quarterly deliveries in early January, but that may not be enough to satisfy investors as the electric vehicle leader grapples with inflation, rising interest rates, crimped production in China, and concerns about softening demand. In an effort to clear inventory, Tesla offered a rare $7,500 discount to customers in the United States who took delivery of a new Model 3 or Model Y at the end of the year, along with 10,000 miles of free supercharging. The Inflation Reduction Act, or IRA, will restore up to $7,500 in federal tax credits for certain EVs starting January 1st. Deliveries are one of the most closely watched metrics by investors eager to see if Tesla can maintain its rapid growth. Global fourth-quarter deliveries could reach 420,760 vehicles, according to 16 analysts surveyed by Bloomberg. That estimate, which doesn't include some of the more recent analyst projections, exceeds the record 343,830 cars delivered in the third quarter. Tesla is the world's dominant seller of electric vehicles and is well-positioned to take advantage of some of the IRA's tax credits for battery cell manufacturing and locally assembled EVs. But in order to meet its goal to grow deliveries by 50% annually over several years, an objective Tesla warned it would fall just short of in 2022, Tesla will likely make compromises when it comes to gross margins. Tesla has cut prices across its lineup in China and scheduled downtime at its plant in Shanghai. Still, Wall Street is projecting just under 420,000 units for the last quarter of 2022, according to 24 large brokers. In the past few weeks, delivery estimates have been coming down. Fourth quarter estimates peaked at about 450,000 units in the summer. Coming into December, the fourth quarter consensus estimate was roughly 430,000 units, according to FactSet, a financial data company that lists more than 40 analysts that cover Tesla stock. A number around 420,000 should be good enough for investors. When delivery results top expectations, Tesla shares typically perform well in the space between delivery results and when full quarterly results are reported a few weeks later. Moreover, analysts expect Tesla deliveries to grow about 40% in 2023, hitting 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Meeting 2023 delivery estimates will go a long way to convincing investors the 2023 earnings estimate is sound and that Tesla stock might have sold off a little too much this past year. For now, it's way too early to tell how 2023 will turn out for Tesla stock. Make sure to subscribe to this channel for more.